Today we're going to be having a discussion about the Bitcoin halving that is coming up in about 9 days, and specifically wanted to talk about what miners are doing to get prepared for the halving. And fortunately for me, I've got here Feng, who has been involved in the Bitcoin mining industry for a number of years now, and she's very well researched on the subject and companies and different players in the space and what they're doing. So thanks, Cindy, for joining me today.
Thank you, Hayden. Personally, I like to follow what the miners are doing. It's pretty fascinating how the trend change.
So obviously the halving happens approximately every 4 years.
Yeah.
And each time the Bitcoin block reward is halved. So currently it's 6.25 Bitcoins per block, and that's going to be halving down to like 3.125, if I'm correct. And so what sort of challenges does this pose for Bitcoin miners?
So there obviously, when the basically revenue cut in half, which means they may have a difficulty, especially if the market crashes. So I think the major challenge is the block reward significantly reduced.
Yeah, so they've got less income and basically they have to find a way to remain profitable.
Yes.
So one thing that's different this time is that generally the bull market for Bitcoin's price doesn't begin until after the halving has occurred. But this time it started significantly earlier. So we've already been making new all-time highs just in the previous month or so. And how has this changed things for Bitcoin miners? Are they in a better position than they would be if the price was, say, down at like $30,000 where it was a few months ago?
I would say yes and no. Definitely when like your Bitcoin price reach a new all-time high, less efficient machines can still up running and make some profit. In other scenario, if market is really bad, these machines will be resting in dust. So yes, in this way, but at the same time, we have to know this is a free market. So when it's profitable to mine, everyone rushes into like mining. They plug in even older generation, so pushes the mining difficulty even higher. So we always see new difficulty high and make it even harder to mine, and make a hash price relatively low as well.
Another major difference I noticed this time around is that there's a lot more mining companies that are now publicly traded.
Yes.
There's actually, quite a few compared to the last halving now. Why is that? Why are they all being publicly traded now?
When you are public listed, you get access to capital, which could become your advantage compared to private miners. This is my understanding.
Yeah, so that's one way that they're trying to stay above water, I guess.
Yes, especially in difficult times or like a really bear market. And I want to add one more thing. When the market really low, like 2022, 2023, we only saw a handful of attempts for public listing from miners. But this year, when market bounced back, now it's just April. We already see a few miners went public, and we know several others are planning to go public in next 12 or 18 months. So when market is better, I think there is like a tendency they want to go to market. Probably it's easier to be listed as well. I may be wrong.
Yeah. So following the halving, what do we think that the effect of the Bitcoin ETF is going to have on the price of Bitcoin?
When we are talking about the Bitcoin ETF, I think is that basically drives demand because now institutions are after Bitcoins. And when we have a halving, basically the block reward will reduce. So you get a higher demand, but the lower supply.
Yeah.
So generally, economic tells us the price should go higher. And I think ETF approval this January really contributed to Bitcoin price sparks in the last couple months.
Yes, that would be my assessment as well. That's why it's the bull market triggered early, basically. Yes. And yes, that's another consideration that if they're already sucking up all this supply currently, when it halves, when the block reward halves, then there's going to be even less, and thus the price is probably going to continue going up quite massively.
Yeah, so if I recall the numbers correctly, probably or just a rough number. So every day inflow of this ETF, they probably sucks around 3 times of new supply. So at the moment, we daily supply of the new supply of Bitcoin is 900, and 3 times that's every day. Yep. More than 2,000 Bitcoins are reserved by these companies. And I heard some institutions from Wall Street also talk to some public miners to inquire whether they can buy directly from miners because they can't get enough from the market.
What else have you observed Bitcoin miners doing in preparation for the halving? Have they been upgrading a lot of old equipment? Are they expanding their facilities? What's going on there?
So I think at least for public miners, there are a few things in general they are doing. One, obviously upgrade fleet, means the mining machines, because they need to be efficient enough to stay in competition or stay relevant. And if I recall correctly, around, for example, Riot and CleanSpark each spend probably over 400 million upgrading their fleet, and that really ups the game. And at the moment, the mining efficiency is around 30 joule per terahash, but now they are more looking to 20s, or even latest model is under 20, so between 15 joule to 20. So
yep.
We can say that obviously upgrading fleet, and I think another thing is expanding. Because when block reward significantly reduce with the same amount hash rate, to maintain the current production, they need larger data center, more hash rate capacity. So miners are actually actively expanding, especially public miners. And several public miners have already announced they are likely to more than double their current capacity by the end of next year.
It's a bit like an arms race then.
Yes.
And, see who's going to be able to survive after the halving. Survival of the fittest.
Yeah. And another thing, when we talk about Bitcoin mining, we have to talk about electricity, especially for the cost perspective. Electricity probably is the largest cost in terms of production. So now we start to see migration of miners to cheaper energy supply destinations. For example, Paraguay in South America, Ethiopia in Africa. So now you see, they are actively looking for cheaper place And another thing about electricity, because of the regulations or some ESG programs, if miners are using clean carbon-free energy, they are able to they may be able to secure electricity at a very cheap price or even get a credit from that. So green sustainable energy or even surplus energy is another trend for miners.
Yes, so those topics kind of tie into some other things I wanted to ask about. Obviously, there's a lot of Bitcoin mining now concentrated in the United States.
Yeah.
And there's been a bunch of like regulatory pressure or like scrutiny against miners. And it seems to be that there's a group of people in the government or whoever that think that, Bitcoin mining is using so much energy or it's bad for the environment. And this couldn't be further from the truth. Is that right?
I think this is a very difficult question. There are some entities actively push out some campaigns to bad name Bitcoin or Bitcoin mining. But the thing is, we have to compare apple to apple. Can you complain that someone uses too much energy to do like dry cleaning?
Or you could say, that hospital uses too much energy, so we should shut it down. It's a stupid argument because it's valuable to have such things operating.
Especially when I talk about like a decentralization and it's like for next generation of assets.
Yeah.
So.
Well, it's not even true like what these narratives and these people are saying, right? Because a lot of the energy sources that the miners are using is renewables now, isn't that right? And
yes.
A lot of miners are now striving to increase the percentage of the renewable energy sources that they're using.
Some data I see from last year the average green energy percentage is up from public miner is around the 54% energy source is green. But we have to say this number must have increased because we know several public miners have announced that they are going to focus on green energy only. So they use hydro, solar, wind, or now even looking into nuclear.
And is that mostly in the United States, or is that why they're relocating to other places currently?
You mean regulation or?
Yeah, because of the regulations or just the cheaper electricity?
I think both regulation is one aspect, and most importantly, I think miners are driving by revenue. So, if there is a way to help them cut down the cost or get better revenue in the end of the day, they are going after it. Especially if regulation or regulatory landscape is relatively stable and friendly.
One other question about the halving and how miners are preparing for that. I noticed that some companies have been trying to diversify their business verticals and that sort of thing. So they're doing other stuff that is not actually related to Bitcoin mining. It might be in AI space, for example. So what can you say about that?
Yes, diversification is generally a strategy adopted by miners now because, for Bitcoin, we see typical circles. It has bull run and a bear run. What are you going to do in bear run? In last bear market, we saw a few large miners went bankrupt or got out of the game. So
there was that Core Scientific, I think was one.
Yeah, but they just got I think they restructured their finance and got relisted again this year. So again, I would say this is the diversification strategy. For AI, they also need the data center, also need a lot of electricity. If I'm not wrong, AI could be much more profitable. So some of the company, I kind of remember, they report I think that's like a Bit Digital. It's a relatively small public mining company. For last first quarter of this year, their AI business arm has contributed a large amount of revenue to their revenue. So I gotta remember the number, but it was really interesting.
No, that's cool. And so, I guess these are all part of the strategies involved in staying competitive post-halving.
I think this year we would see a lot of interesting things. Especially, personally, I think miners will look into capital market much more. At the early days, miners were like amateur projects. Then they became more standardized.
And more professional, more industrial-like.
Yes, and also over time, they learn how to use a financial instrument to play better in the game. So I think we should definitely pay more attention to financial market. And I think I'm looking forward to it. See what other things are happening, and we probably see like Bitcoin mining destinations change again. We see innovations. Previously, we only have a few minor manufacturer. Now we see a few more brands pop up, and from specifications they released quite competitive. So I think the game is getting better, and looking forward to it.
Very good. All right, well, thanks for sharing all those insights with us. I'm sure it's been valuable information for all the viewers. So if you enjoyed this video, guys, make sure to give it a like, share it, and subscribe. Hope to see you all in the next video.